yet. All right, perfect. Okay, mic check, check 1 2. Hopefully you can hear me. Welcome to today's session in regards to trade with UFOs, nailing forex. So just making sure that in terms of disclaimer, I'm here just to give you a form of educational purposes only, and I'm giving here to give you any form of advice. But in this session is mainly more about performance-based in terms of what you did during the week in terms of trading. So in this particular case, say for example, this week it started basically on a slow start at the beginning of the week, and today when non-farm payroll came in, unemployment rate, the dollar index basically came back up, rebounded, and as you can see here from the chart, major currencies against the US dollar basically started to drop based on from a 4-hourly time frame right there, but this is from what happened earlier today, about 3 hours ago. So that being said, all the trades that we basically put in were all winners, and on average, actually made about 280 pips in total based on the pairs that we basically traded. So performance at the end of the week was phenomenal. The beginning of the week was pretty slow, and for me in particular is simply to have the patience, just to be patient rather than being impulsive or in a fear-based and basic part of the uncertainty component of it. So, Aaliyah, I would like to ask, how was your performance basically for the week? If you're gonna rate yourself out of 10, what would it be? What would it be? So if you're gonna rate yourself out of 10, what would it be? So if you are going to rate your performance out of 10, what would it be? So as a bit of a background, I've been trading now for the past, this is my 26th year. Actually, no, I beg your pardon, 24, this is my 25th year, not 26, because I started in 1995, close in 1996 actually. So 24 to 25 years trading. I went full-time in 2002. So professionally, I've been trading since 2002, and I've been teaching traders since 2003. Actually, it was by coincidence. Started teaching first my friends, and then from there it became a passion, since trading is also a passion of mine. But I had a big drawdown, two big drawdowns, actually, one in 2003, and then I had another one in 2000, and I'm sorry, three times, 2006 and 2017. So by the end of the day, it is simply more about the psychology based on our human emotions, how we can control that human emotion when we're trading. And so I got my certification in neurolinguistic programming because I wanted to know more actually about my behavior and what my limiting beliefs are, my value systems, what is it that really triggers. So even though I've done NLP since 2003, 2004, and now currently I'm taking actually my master's certification for neurolinguistic programming, I studied it to use it for myself. And then when I started teaching and I started coaching, I actually helped in regards to my education in terms of helping others as well, in regards more to the consistency, because we can't really, as long as we have emotions, as long as we have beliefs, and these belief systems, by the way, have been experienced since childhood, especially with the word expectation. The word expectation will appear quite a lot without even us knowing. For example, if I traded this, say, to go long, and I'm being subjective, and I'm utilizing, say, a trend line as a methodology, as a technique, with no confirmation, and price is currently at demand where buyers are supporting the price, and say I didn't do my homework, I didn't realize that there is a nice beautiful lower high right here, and that the odds and probability that it could retest these previous lows from that high, low, high, and the next one would be somewhere here, is highly probable. But because I can see this as a minor uptrend, and say for argument's sake, I went in long and I wasn't being aware, I didn't do my homework, I wasn't being ridiculous, and what did I do? I entered that trade. So my expectation, we always have an expectation, the expectation to win. So if I have that expectation of winning, and then this happened, then the negative emotion of fear will come into place. The fear, the self-doubt, the lack of trust, the lack of confidence, and then all of a sudden the anxiety will build in, and impulsiveness to close the position very, very quickly will also occur. But if I'm calm and collected, I will close the position and go short with it. However, research has been shown that 95% of humans are asleep, meaning that we are not awake, we are not aware of what's really happening, because our reality is being created by our own perception. In other words, our perception creates our own reality. That perception are simply based on our belief systems, either our supporting beliefs, but in most cases, they are limiting beliefs. So where did the expectation did come from? Well, the expectation will all of our expectations come from childhood, basically even from childbirth. Why? Just think about it. Well, I have 2 kids, and actually being a father is probably the best thing as ever in terms of my life, in terms of what's I've experienced, because I delivered both of my kids. Mind you, at the hospital, and simply the doctor basically, hey, come here, and I believe it's important for you to deliver it. And then, my first experience, like, what? It was surreal. It was like, it was an amazing experience, basically. But to see a child cry, coming out basically from the womb, and to have that life it's a phenomenal experience. And then the only thing for me being a father is that I will never experience in terms of what the mother and child will always have, because of that energy that they will always have, because the baby's been inside the mother's womb since day one, and they will always have that connection. I'm very close to my kids, and I love them unconditionally. However, there's also that connection that like I said, there's one thing that we'll never experience is that connection between a mother and child. Why? Because when a child is hungry, and it's interesting, actually, it's a very well-known fact that when the mother and child are separated, and say, for example, the mother went to a supermarket and the child is at home, when the child starts to cry out of nowhere, the mother will start to milk, and because of that element, it's just the pure energy. It's an amazing aspect, actually. So when a child cries, they have different types of cries. Why? Because part of the expectation of a child is that they're hungry, they need to be fed, and that when they're wet or they done number two, the cry is also different. When they are, say, they don't feel well or they feel sick, the cry is also different because their way of communication is actually through crying. And then through progression of a child between 1 and 2, which they're being labeled as the terrible twos. It's only labeled as terrible twos because of their expectation that if they're being fed, they need to be fed. However, once parents starts to limit them and to say no to certain things, what do? They create certain tantrums. They will scream, why? Why I'm not getting this? Because before I'm getting it and now I'm not getting it. And then, funny enough, we bring that to adolescence stage, from 13 to 18, where adolescents basically, or teenagers, think that they know it all. And if they're being rejected, that's a form of limitation. And hence, that's why nobody likes to be limited. Everybody wants to be free. And a part of that limitation sometimes could be a privilege. So you can see certain kids are being privileged rather than being grateful to their parents. What do? They act basically like a douche to their parents. And sometimes I think they know it all. I mean, we've been there, done that, to a certain degree in our life, then we have a certain rebellion, and this is part of the stage. And then we bring that to adulthood, excuse me, and we also want to belong in terms of society. Either we get rejected, we be accepted based on perception, whether we discriminated or we experience racial discrimination or some form of discrimination. And then through there, people want to learn how to trade. And depending on your learning experience, depending on what you guys have here, Leah, Angelos, Marin, Paulus, it all depends on the way how you learn how to trade. So if you learn how to trade via a book or via YouTube or by yourself, then you're going to struggle. No doubt. However, if you learn how to trade basically from a mentor or someone, you have a coach, then it becomes more easier to a certain degree because the 180 degrees that you can't see behind you will be dictated by that coach. Very similar to an athlete. An elite athlete will have a minimum of 2 to 3 coaches. A professional athlete who gets paid will also have a minimum of 2 to 3 coaches. So if trading is a business, and if you really want to do this, and if you do not have a coach, my question to you is why? And the reason being is that coach will see that 180 degrees behind you, will correct your technique, if a good coach also will have certain experiences in terms of emotionality, then they will also tell you in terms of what your limitations are, in terms of what your limiting beliefs are, and part of now in terms of the expectation. We all don't like to lose because we all want to win, especially if you're very competitive. And at some point, losing is not an option. However, based on my experience as an elite athlete, and I still compete up to now, so I do Brazilian Jiu-Jitsu. I still compete basically on the master's level, meaning now that I'm actually 48, I'll be 48 this month. I still compete. So I competed in a world-class level in Taekwondo. I used to represent Taekwondo in Australia, basically for Australia. Almost made it to the Olympics. I was in the top 3 in the 2000 Olympics. It's very tough to be, once you get to that level, you have to perform. So trading, the way how I trade is very similar to my sport. Now that I do Brazilian Jiu-Jitsu and I compete in Brazilian Jiu-Jitsu, Brazilian Jiu-Jitsu for me is very, very similar to trading, especially my style of trading. I am not a day trader in regards to momentum, and I'm not a scalper. My minimum time frame is 1 hour, 4 hours, but I call myself as a trend follower, which I do follow the trend, and I leave my trades sometimes 3 days, 4 days, a week. It can last for months, depending on the strategy. But that being said, in terms of thinking, even 1 minute time frame, if I change this time frame to 1 minute, which is 60 seconds, you still have 60 seconds of actually thinking. You can change your decision-making process, and you can change that choice within that 60 seconds. And you can disobey your own set of rules based on that 60 seconds, based on one thought, and that one thought of uncertainty that creates a self-doubt. Sometimes that self-doubt is based through analysis paralysis rather than following your rules or the system itself. That's why these days the majority in terms of institutional type of trading is now algorithm based, with computers becoming more faster and programmers are becoming, a lot of smart programmers out there, and they will program to eliminate human emotion to automate things. However, as long as there is still an open outcry is simply a market maker will create the price in the bid and the ask, and as long as there is that, an institution can still be able to dictate in terms of what the price is going to be, then there's always going to be that element of human interaction. And it's just simply where electronic trading will come into place once it's been set, when the high and lows have been set, and based on news, everything will follow suit basically from there. I don't call myself as a retail trader. I call myself more of a professional observer, which I am a trader that observes price based on what institutions are doing. Because in the past, I've been taught in terms of learning a system using indicators. Indicators are secondary. Primary is price action, where price is being dictated by news. So price is evaluated through an external environment, external force called news. And that news will create supply and demand. When an institution, a bank, in regards to this, say as a currency, when a bank will dictate the price and they will buy an X amount of lots, in this particular case, they will buy in millions, and the rest basically will follow. So in other words, if say Goldman Sachs will buy 100 million contracts of say the Kiwi against the US dollar, then everybody will follow suit from there. So when everybody is following based on that buying component, then a demand will be created and the valuation of price will go to the upside. On the other hand, if an institution starts to sell based on news, then everybody will follow. Retailers, fund managers, but the bottom feeders are what I call them the bottom feeders, are simply retail traders. So the way on how I would be able to describe in terms of trading is I just want you to imagine, let me just draw here. Oh no, sorry, I don't want a line, beg your pardon. We don't want a line. Uh, here, here. Apologies for my drawing, but I just want you to imagine that this is a whale. This is the big whale, and that's its mouth. And these little dots are your bunch of sardines all clumped up together. So when you see a whale and they're hungry, what do? They circle, they create circles. They will trap the bunch of fish, in this particular case, a bunch of sardines. And when they create that, in terms of they trap him, go in circular motion. And when the whale is ready, basically what it does, it'll just open its mouth and using the current, which the whale don't even realize that they're actually now being eaten alive. For me, that's the same analogy based in trading. The whale are your big institutions that will manipulate the marketplace. They will create bait. They will bait retail traders, and the retail traders are the bunch of sardines, and they're the bottom feeders. People who will do the same using the same indicators, the same system, same methodology. Goldman Sachs, actually a few years ago, actually a decade ago, wrote an article that the success rate of retail traders is 55%, which makes sense because if you do the math in terms of using any type of indicator, it's around 50-50, 50% success rate. Moving average, for example, is an average between a range between the high and the low. If you're dealing with an oscillator with an RSI or momentum indicator, for example, you're using overbought, oversold signals. However, it's still a lagging indicator because it's also being utilized by majority is the closing price. If you use an RSI with the top 40, the past 14 days in terms of the closing price, it will create the relative strength index of the particular asset class. That's why in terms of the success rate of retail trade is around 50-55%. So in other words, you're just playing, a retail trader is playing a coin, either heads or tails. But where the success retail trader basically makes money is through risk management and money management. But if we're going to go back through here, that if you want to have a higher success rate, then it is imperative for you to be an outsider to see where the whale is actually going and what the whale is actually doing. So if the whale goes up, you have to go up with it. If the whale goes down, you have to go down with it. If the whale stays stagnant and neutral, then you have to stay stagnant and neutral. Because trading is a zero-sum game. Either you win or you lose. And the whale will create, or institutions will manipulate to create price. It will create whatever. Why? Because if there is a buyer, who's the seller? If there is a seller, there is a buyer. So when I saw this, when I started going through the trading floor, first time I got into the trading floor with the CBOE, the Chicago Board of Options Exchange, because I at the time I was trading as well, not just options. I actually started with options, and then I went to options to stocks, the day trading stocks, to futures, the day trading futures, then to currencies. I love currencies because as a mentor, as a coach, I saw the benefits of using Forex as a vehicle for learning. Because here in the US, if you're trading stocks, you need the minimum of $25,000 by SEC rules if you want to trade more than 3 times a week. If you're trading futures, you need a minimum of at least $10,000. And the reason, if you want to leave your trade overnight, you need at least a minimum of $8,200 to cover the margin requirements. Now, before before 2009, you can have a margin requirement or leverage of 100 to 1, 200 to 1 with trading Forex. Now, the maximum in terms of the US is 50 to 1. So by utilizing a vehicle of Forex where it's 24 hours a day, 5 days a week, you can control the risk. Price is price, a chart is a chart, and then going through the macros anyway, looking at the macro fundamentals, which is looking at the whole global economy in regards to the connectivity. Because currency pairs or currencies in general, like the dollar, for example, in my opinion, is the central hub for everything. If there's news based like today unemployment rate, notice that the dollar index basically went up. There's divergence at this point. The S&P basically dropped. Oil dropped. Gold dropped. And there's a relationship. So oil, for example, is connected with the Canadian dollar. That's why the dollar CAD went up. Oil basically dropped. Dollar Swiss also went up. Aussie against the US dollar dropped. Why? Because gold dropped as well a little bit. And Australian dollar is very strong because of this. Why there's relationships. So for me, as an observer, to figure out, I didn't figure it out. Actually, I've been taught by professional traders and to see what they're looking at and what they're really doing. And these are the things that I also do. I need to know because whales actually, institutions will leave clues on a chart. But it's up to you to figure that out to find what those clues are. Now, if you're using indicators, for example, it's too late. Why? Because the risk in terms of buying, this is where the lowest risk you'll ever have. This is the lowest risk you'll ever have if you're selling and when you're buying. This is the lowest risk you're ever going to have if you're selling. This is the lowest risk if you're going to buy. So they will leave clues based on where they will buy or they will sell. Where you have the highest probability of winning with the lowest risk, in my opinion, that is the best strategy or system that you're going to have. So I've heard a lot from different teachers. You need to have a minimum of 2 to 1 reward to risk ratio. Yeah, you can have a 2 to 1 reward to risk ratio, but what if you're against the trend? You will never ever get your 2 to 1 reward to risk ratio if you're going against the trend. You might get half, 0.5 to 1, 0.3 to 1, based on a counter trend, but never a 2 to 1. The only time you're going to get a 2 to 1 reward to risk ratio if you're with the trend. In my opinion, as a strategy, if you have zero risk, then you have infinite rewards, then that's the best strategy in my opinion. You can replicate that over and over again and you'll never lose, basically. So that being said, that if you would be able to dictate or you'd be able to know what institutions are doing, that's why I call myself as a professional observer. I observe what institutions and what the whale is. So I am that little fish next to that big whale. I will never be on this side anymore. Each and every time if I'm on this side, and the only time I'm going to be on this side is based on my emotion of righteousness. So in trading, by the way, there are two parts of why humans will always have a double, what's the word I'm looking for? It's not a double-edged sword, but there we go. We have split personalities. You know that monkey mind? Some say, one will say don't do it, the other one will say do it. One say you get out, one say you hang on. So the question is, which is correct? So it is actually a challenge sometimes when you don't know yourself, and when you say you don't know yourself, to know oneself actually in trading is very important. Why? Because there is what we call the true self and the false self. So what is the true self? me type in here. True self, slow, versus the false self. Erase. In trading, so we have the human mind. The human mind is you have your subconscious and you have your conscious. Your subconscious is based on your the subconscious is based on the true self, which is simply the values that you do have since childbirth. Sorry that I have to pause through there because I'm being careful what I'm saying. So there's the ego and the non-ego. The ego is the false self. So the true self are things such as confidence. So I'll go back to the child example. You see a child or you see an infant, a baby. The only thing they will do is they will cry, they can't walk. What happens then? They're laying on their back. And at one point in time, when you see a progression of a baby, they will rock. The next thing you know, they're on their bellies. And then from their bellies, their actually head starts to develop, especially their neck, because they have to look up. Just imagine that's a heavy head right there. And imagine the amount of pressure that a neck has to happen in order to lift that head up. So the development of the neck is actually happening, and then through there they will go on their knees. They start to crawl, and then from crawling they're developing actually now their legs, and they start to sit. From sitting they start to stand up. When they start to stand up, they learn how to balance themselves and they start to walk. Parents, what do they normally do at the very beginning? They're going to motivate them, big smile, big laughs, loud voice. Yay, you can do it. Great job. One more step, one more step. So they're motivating the child. And imagine the amount of confidence that child already has. But the child doesn't know that. The child is just doing what it's doing based on nature or what nature is supposed to do. And then when the child starts to walk and they start to run, what do the parent now start to do? They start, stop. Don't climb that chair. You'll hurt yourself. Or in most cases, they won't even explain. And of course, the child doesn't understand because the brain hasn't developed as yet. All it's doing is simply doing what it's doing, but at the same time, the child actually knows that because the parent will get excited, what do? They will do anything in order to get validated and also to be loved. Isn't that interesting? And now the parent is saying no. What happens now? Do you think the level of confidence of that child starts to deplete? And the child starts to go to school and kids are mean. Kids will tell them you're a loser, you're fat, you're this, you're that, you're ugly, 4 eyes. And the level of confidence will start to keep depleting once again. And what happens now, there's now that lack of confidence, the self-doubt. They're creating now a story in their head that they're not good enough, that they're a loser. They start to trade. What happens? It manifests itself to a certain degree in terms of that fear, because that fear is now being translated that they're not good enough in terms of the way how they're analyzing things, and now and especially when they've lost, think that they're not worthy of it. And whether they do, they will find a way to keep trading because they have to prove to themselves that they're worthy. But because of the lack of confidence, sometimes they hesitate to enter or sometimes they hesitate to get out. Either they're going to be right because they don't want to lose because of the ego, start of their righteousness now. So it either goes the other way. That's why the false self starts to develop. So the question is, what happened to the level of confidence? We all suppress that, but at the end of the day, confidence is always there. What happens to self-worth? Self-worth is always there. It's just been suppressed. Why is it being overruled by the false self? And sometimes the false self controls now the true self, and the person thinks that that's the true them. And they forget on who they are as a human being. And they start to label themselves. If you ask, and this is a question, I'll ask you this question, who are you? Would you be able to answer that? I guarantee you, some of you will have different answers to that question. Some will say, I'm a father. Some will say, I'm a mother. Some will say, I am a provider. That is not who you are. Those are just labels that have been labeled to you. Like your name, for example, is a label, given by your parents. But that is not who you are. Who you are is simply this. You are kind, loving, generous, respectful, disciplined, consistent, profitable trader. If I would say that as a trader itself. So now, if you have a belief system, and in terms of say to yourself that you're a confident, consistent, profitable trader, yet you're fearful, then you have a problem. When I say a problem, because you have no conflict. How can you say that you're a consistent, profitable trader when you're fearful? You won't be able to. And the reason being I say that is because of the conflict of fear and the level of confidence. When someone is confident, they're not fearful because they're confident. When you're confident in your own system, in your own analysis, then you will need a level of respecting the marketplace, a level of responsibility, a level of honesty that you are okay to risk that amount of money. In most cases, people are not being honest with themselves. They're just lying to themselves that they're willing to take that amount of risk. I'll give you a good example. If you say to yourself that you're willing, say you're dealing here, that you're going to buy the Aussie against the US dollar or the Kiwi against the US dollar at 66.14, and your stop loss is say at 66 flat. That's a 14 pip difference. If you're trading one standard lot, say one pip is $10, that's $140. Are you okay to lose $140? Now, if you're highly neurotic, I guarantee you will micromanage that account. Why? Because the level of honesty is not there. Because if you're micromanaging the account, then that means that you're not really willing to risk $140. Why? Because maybe perhaps you're only willing to risk $20. Sometimes people are not even willing to risk $20 because they don't want to lose. But you can't do that because the market will go up and down. Then you're no longer letting the market do its thing, or you're not letting your system do its thing in regards to what your trading plan is supposed to be. So if you don't even have a plan, then you're screwed. Then that means you're just gambling. Then it means you're no longer trading to make money. You're now trading to supplement what's missing in your life based on your belief systems that you do have in terms of your own limitation, that you see fit, that you think that it is true. But in actual fact, that is not the reality. Why? Because our perception creates our own reality. And the end result is just simply a reflection of the 6 inches between your ears based on your own limitations. Because at the end of the day, there are no limits when it comes to making money. But the question is, then why is it that not everybody is making any money in trading? It's because the 6 inches between their ears. And to be honest with you, people believe that to make money from trading is through having a perfect system or a good system. In my opinion, that is not the key to successful trading. The key is mastering your own self, the 6 inches between your ears. Would you be able to handle the emotion of fear when the time comes? Would you be able to handle the negative emotion of regret? Would you be able to handle the negative emotion of fear of missing out, anger, irritation, sadness, depression, versus trading in a happy state, trading in a level or a high level of confidence? Now, going back to the responsibility part and honesty, I guarantee you, it's a G word and this is recorded. Fear will dissipate when you take full responsibility and honesty. Meaning that if you truly accept, quote unquote, acceptance, if you accept that you are okay to risk $100, $120, $140, then you have nothing to worry about because you accepted that risk. Why? Because the market can only go in 2 directions. Once you enter the trade, either it will go to your profit target or to your stop loss. That is it. No more, no less. So in my own opinion, one of the key variables in trading is probability. Once you have found enough evidence, and that evidence is your statistical data that will create the probability of winning, and if you say to yourself that you have an 80% success rate, or the 80% probability that is going to go to your target point, and you have a probability of 20% to go your stop loss point, then you can calculate very easily the amount of position size you're willing to take based on the 20% that you may lose. So if you can recognize that, even if you have a 30% win-to-lose ratio in terms of success rate of your trading methodology, you will end up as a winner at the end of the week, at the end of the month. Why? Because there's a certain formula in terms of positive expectancy and risk of ruin. So if you can follow those set of rules in terms of your risk management, money management, your probabilities, then you can end up as a winner. But it takes discipline. It takes a level of respect of oneself to follow your own set of rules, the integrity to follow through what you have basically stated. And once you have that integrity, you will have discipline, you will have motivation, you will have commitment, you will have desire, you will have passion, you will have basically everything. But you have to honor your own word, and you have to be honest. All right. I believe this is it for the rest of the session. I'm sorry that I took over through there, but I believe it's just I have to state that. And thank you for coming in. So as part of your homework, in my opinion, would be to go back in terms of your trade results for this week, your performance. So if your performance is a 6, then you have a deficit of 4. The question is, what is that for? And that's part of your goal in terms of your planning for next week. So first you need to identify what the problem is. Once you have identified that problem, then you need to define, or you need to find a solution to that problem. Where is the problem coming from? And once you have found that solution, or the root cause, and you diagnose that problem, you find the root cause, and you can create a solution. And that solution, you have to follow that solution part of your plan. So if you do say, for example, I disobeyed my rule, then where did that come from? When was the time that you disobeyed certain rules? But isn't it interesting that if you have a job, you will follow the rules of the company, yet when it comes to your own company, your own business, it's easy for you to disobey that rule. Just think about it. So, and then from there, you can create a plan on what you would be able to do for next week. Okay? So thank you so much for coming in, guys. Please be safe out there. Keep trading, keep practicing. And if you have any questions, please feel free to email me at Reynaldo@tradewithufos.com. And we offer classes too, by the way, and coaching. Just go through traditive.com. And yeah, if you have, if you need any help, please keep in touch with us. So get in touch with us, and I look forward to seeing you next month. Right now, we're only doing once a month for these sessions. But if you want to know more, yeah, please email me. All right, guys, thank you so much. Take care till next time. Please be safe out there, and happy trading. Have a great weekend.